Matt from InvestiQuant. Today is Friday, May 29th, 2020. So this afternoon, I want to do a quick update on the video we did this morning about the last trading day of the month that had a pretty consistent weak bias to it when it is above the 200-day moving average. And we've seen some of that play out so far, so I just kind of wanted to update it and look at what it looks like going into the afternoon when it is playing out. So this morning we gapped down and we have been pushing lower. We are trading below the opening price, looks like everywhere in all of the indices, which means we are forming a red daily candlestick. So I just want to look at what has happened going into the close when there is a red daily candlestick forming on the last trading day of the month. So let me minimize this. Let's hop into Discover. We'll look at all four instruments. We'll use a time-based entry, and we'll just test 2:30 p.m. Eastern time. We have this set up as a long exiting at the end of the day. And the only information that I really want to put on here is that we are forming a red candlestick. So if I go to this intraday close versus the range, we are trading below the open. This will be testing that we're trading below the open at 2:30 p.m. Eastern time. And then adding the indicator, yesterday closed above pretty much every moving average, but I'm going to go ahead and use the 200 since that's what I used this morning. And then I need to go to the calendar to add that last trading day of the month. If I do that here, I can hit equals and then view results. And here are the results of going long at 2:30 p.m. Eastern time if trading below the opening print of the day and holding until the close 4:15 p.m. Eastern time when the prior day closed above the 200-day moving average and it is the last trading day of the month. And you can see the equity curve is pretty smooth up until recently. It looks pretty messy there, actually. It was pretty smooth. If we looked at the one from this morning, it was much more smoother to the downside compared to a little bit of a messy look that we're getting here. Starting, what is that, around 2016-ish area. Looking at the stats next to it, ES 87 samples, NASDAQ 92, 88, and the YM 63, and the Russell. And it looks like the Russell is actually the most consistent. If I just hover over the Russell right here, you can see the equity curve of just the Russell, and that one is weakest at 42.8%. So that one has historically been weak going into the close, as they were off the open as well. And if you look at the others, win rates coming in, 46% for the ES, 48 in the NASDAQ, 47 in the YM. So those aren't that low. They're just slightly under 50-50. But looking here at the equity curve, it does look like it's lost a little bit of its consistency. Let's take a look underneath. Last 5 years, right here, this is the S&P. Looks like 55% win rate the last 5 years. Let's look at the NASDAQ. NASDAQ last 5 years, so 53%. Okay. YM last 5 years, about 57%. And Russell last 5 years coming in at 53%. So yeah, you can see it there on the equity curve, and the stats for the win rates here hold up as well, that the consistent short bias that was happening here has not really played out over the past handful of years. So not showing much of an edge there in recent years going into the close based off this pattern. Historically, though, that was a pretty weak pattern up until just recently. And again, this is based off trading below the open. We do have the president about to speak here, probably between the time I finish recording this and the time I actually get it posted. So who knows where the market's going to be at that point in time, but this is based off of trading below the open. So hope you found that interesting. Good luck the rest of the day, and we will see you next week.